Are you an NFT seller in Wisconsin? If so, you may be shocked to learn that NFT sales are taxable for sales tax purposes in Wisconsin based off of their latest guidance. The problem is almost no one is collecting and remitting sales taxes on their NFT sales in Wisconsin. Don't get caught off guard by the tax man with surprise tax bills. In this video, we're going to go over how to properly collect and remit sales taxes in Washington so you can stay in compliance and protect your bottom line. So what is sales tax? Sales tax is a tax that's usually collected at the point of sale by the seller, and it can be placed on products or services. The tax rate that someone will pay on a purchase for sales tax purposes is going to vary on a state-by-state basis. In Wisconsin, the sales tax rate on most purchases is 5%. So how does Wisconsin specifically apply taxes to the sale of NFTs? In their bulletin, they've indicated that NFTs will be taxed for sales tax purposes based off of the underlying product that's being sold associated with the NFT. So when you're selling an NFT, you may be selling a standalone NFT that represents a digital artwork, or you may be selling an NFT that grants access to a product or a service. So the taxability in Wisconsin is going to be based off of the overall nature of the NFT and what the underlying product is. Then based off the underlying product and Wisconsin's guidance related to those types of products, that's how sales tax is going to be applied. Now, in the bulletin that Wisconsin has put out for their initial guidance related to NFT sales taxes, they've given 3 examples of types of NFTs and how sales taxes applies to them. So the first type is an NFT that entitles a purchaser to download music or movies. These would be taxable in Wisconsin as a specified digital good. The second example they give is an NFT that entitles a purchaser an admission to a sporting event. These also would be taxable as a taxable admission in the state of Wisconsin. And the last example they give is an NFT that entitles a purchaser to a tangible piece of artwork. These also would be taxable events, and in this case, this would be taxed as tangible personal property. So these are the 3 illustrative examples that we have so far from Washington related to the underlying products of NFTs and when sales tax is applied. The big key here is that we need to look at the overall nature of the NFT that you're selling, the underlying product associated with it, and then apply a sales tax based off of that fact pattern. So one of the biggest challenges with NFT sales taxes is sourcing the sale, and this is no exception in the state of Wisconsin. Sourcing the sale simply means being able to determine where the transaction took place for sales tax purposes and what tax and jurisdiction the sale will be allocated to in terms of collecting and remitting the taxes. Now, we've seen differing state-by-state guidance. The guidance that we've seen in Wisconsin states that on an NFT sale, the sales tax jurisdiction will first be determined by the address of the purchaser. Now, as you may know, as an NFT seller, there's many cases where NFTs are being sold and the address of the purchaser is not being collected. Wisconsin has indicated that in those scenarios where no address has been collected, then the sales taxes will be based off of the seller's location. So if you're in a scenario where you're not collecting the purchaser's information and you think this is going to get you off the hook for paying sales taxes, this is incorrect. Wisconsin has addressed this and they will base it off of the seller's location. Economic nexus. This is another important consideration as to whether or not your sales are going to have sales taxes applied to them in the state of Wisconsin. All nexus means is whether or not you have a presence in the state that requires you to collect and remit sales taxes. You can have a physical nexus and you can also have an economic nexus. A physical nexus simply just means that you have a physical presence within the state, and in that case, you're going to be on the hook for sales taxes. An economic nexus means that you cannot even have a physical presence in Wisconsin. You may be selling from a different state completely, but if you sell if you do a certain amount of sales in Wisconsin, then you're still going to have a nexus. So in Wisconsin, if you do over $100,000 worth of sales to customers in the state of Wisconsin, then you're considered to have an economic nexus and you're required to collect and remit sales taxes. So considering both your physical and economic nexus is extremely important to determine when and if you owe sales taxes in Wisconsin, along with any other state. So you may be wondering, what are the risks and consequences to not collecting and remitting sales taxes in Wisconsin? And there are a few. Firstly, Wisconsin has indicated that this NFT guidance that they've provided is interpretations of their existing tax laws, which means that they can enforce these rules retroactively. That means if you've done any NFT sales in the past, they can go back and try to pursue taxes for those past sales, as well as sales that are going to take place in the future. So retroactive enforcement is a huge risk for anyone that's completed NFT sales in the past due to the interpretations of the sales tax rules in Wisconsin. Additionally, if you get hit with these retroactive taxes, it's going to come with a surprise tax bill because you didn't collect the sales taxes from your customer, and this can largely impact the cash flow of your business operations. In addition to that, you need to consider what this can do to your reputation. If you start getting put out in the media or online that you're not collecting and remitting sales taxes, this may not look good for your company, and this also may not look good for the industry as a whole if there starts to become headlines saying that NFT sellers are not compliant with sales taxes. Lastly, there's use taxes in Wisconsin. And what a use tax basically means is that if a purchaser goes and purchases an item and there should have been sales tax collected on it and there wasn't, then that individual is supposed to pay use taxes to cover the sales tax rate that should have been collected by the seller. So if you're an NFT seller in Wisconsin and you actually didn't collect sales taxes from your customers, you may be putting your customers in a position where they have tax liabilities that they're unaware of that are going to create tax compliance issues for them as well, which puts them at financial risk and also is going to leave them with a very bad perception of your company potentially due to the overall nature of this situation. So these are the risks associated with not collecting sales taxes: retroactive enforcement, damage to your reputation, as well as the potential for tax enforcement to come on your customers in the form of use taxes. So the two biggest issues for NFT sellers that want to get into compliance with NFT sales taxes is collecting their customers' information and calculating the appropriate sales tax rate in the native cryptocurrency at the time of sale. Firstly, within the NFT industry, currently, there isn't much data collection in terms of your customers' information, at least during most NFT sales. That is going to be something that's going to have to change in order to get into NFT sales tax compliance. At minimum, you're going to need to collect your customer's zip code and use this information to determine their ultimate sales tax jurisdiction at the state and local level. Now, the issue with just collecting the zip code is that the zip code will be accurate in many cases, but in some cases it may not deliver a perfectly accurate tax rate, and this can be for a few reasons. Firstly, the zip code regions may differ from tax regions, which can result in different tax liabilities, and certain zip codes may only a portion of a certain zip code may have a local tax rate assigned to it, and that you won't be able to determine that just by collecting a customer zip code unless you have their full address. So the best practice to be 100% accurate in determining the tax rate for your customer is by collecting their full address to get a rooftop accurate sales tax rate. After you've collected your customer's address and we've determined their tax jurisdiction, we'll be able to know what their combined sales tax rate is. The next step is at the point of sale, calculating in terms of your native cryptocurrency. So if you're selling in Ethereum, we need to calculate that tax rate in Ethereum and make sure that gets charged on top of the sales rate that you're charging for the NFT itself. So if you're selling an NFT for 1 Ethereum, for the sake of this example, and the combined sales tax rate based off of the tax jurisdiction based off your customer's address is 10%. At the time of sale, you're going to want to collect 1 Ethereum for the sale of your NFT, and then collect another 0.10 Ethereum for the sales taxes that have to be collected and remitted to the state. So these are the two biggest challenges, is collecting that customer information and then making sure that you charge and collect the correct sales tax rate in the native cryptocurrency at the time of sale. Our team at Digital Impost has automated this process with the software that we created that allows you to collect this customer's information, calculate the sales tax rate in real time at the point of sale, and then on the back end, we collect all of the relevant data for tax reporting purposes, and we automate the tax reporting process in all sales tax jurisdictions. NFT sellers need to automate this sales tax collection and remittance process to ensure accuracy, efficiency, and even practicality given the volume of sales that we see across many NFT companies. We've created an automated solution for this at Digital Impost, where we are able to automate the process of collecting your customer's address information and validating that at the front end, at the point of sale, then calculating based off of your customer's address an accurate combined sales tax rate that we are then able to charge and collect from your customer in the native cryptocurrency that you're completing your NFT sale in. Then on the back end, we're able to provide all of the relevant data for tax reporting purposes, and we're able to automate the sales tax filings across 11,000 jurisdictions that can vary in terms of filing on a monthly, quarterly, bi-yearly, or yearly basis. So Digital Impost has automated the entire NFT sales tax process from start to finish. It's important for NFT sellers to automate this process to make sure that they're in compliance. Digital Impost is the first NFT sales tax software to address this issue for the NFT market.